Welcome and happy almost Friday. So glad you're tuning in with us. We know how valuable your time is. So whether you're tuning in on your phone, computer, or listening in afterwards, we appreciate it. As always, the goal of AutoLeap's monthly webinars is to provide you with a free resource that hosts a variety of industry experts sharing timely and applicable tools that you will be able to help grow your businesses further. Based on the number of you who have registered and joined us today, it's obviously a prevalent topic. I've had the pleasure of working with Chris closely over the last few months on a few projects, and I know the content he's prepared for you all today will be valuable and includes a lot of insightful takeaways for you to implement immediately. Chris has been in the industry for a decade. I think you're celebrating your anniversary. And if you don't know it, he also has a successful podcast called Weekly Blitz that he just released episode 47. Sorry, my dogs are barking in the background, where he recaps what he's learned over the years. So make sure you check that out. We are recording today's session and you will receive slides and a replay from today's broadcast. In addition, we are going to share the survey after. We always give out a $20 Amazon gift card for your responses. Your responses help us determine future topics and speakers. So actually today we're going to try something different. We're going to push a few of those questions during the broadcast. And by submitting those live, we will send you a $50 digital Amazon gift card. All right, Chris, I'm going to turn it over to you. And let everybody hear why they really came today.
Awesome. Thank you so much, Amber. I also want to thank you for giving me this opportunity. And if any of you listen to the podcast, you know that AutoLeap is a sponsor of the podcast, and we've been able to do some really, really great things together. And I look forward to fostering that relationship in the future and really, really making sure that we build a great program and platform for everybody that's using AutoLeap. What I'm going to talk to you about today is probably something that everybody knows or they should know, but hopefully it's in a different light. And so hopefully once we're done, you have a path forward or the tools or a better idea of how to use your tools that you already have. Okay. So without any more of me going into that, Stop Flying Blind, the Definitive Repair Shop the Definitive Repair Shop Scorecard. So I have to be completely honest here. When I started, so Amber said I've been 10 years in the industry. I've been a coach for 10 years, but I started out in the auto repair industry almost 30 years ago. I worked as a service advisor with no mechanical experience. My dad, every time I went out to work with him, basically it was hold the flashlight. And one day I was talking to my dad, he's wiring up some brakes on a trailer. And I was like, hey dad, can you show me what you're doing? And he's like, son, we can't have that. He goes, if I show you everything I know, plus everything you know, you'll be smarter than me. And we don't want to do that. So basically I threw the flashlight down and walked inside and never helped him work on cars again. But growing up, I was always great at selling things, building relationships, talking to customers. So the service advisor role was a really, really good fit. My wife and I had the opportunity to buy out the shop that I was working in. And again, I was always great at sales. And this is one of the things that I would encourage you to do. Make sure you share your income statement and things like that with your sales staff. Show them how what they do affects the business and the ability to move forward and carry on. My owner never did that with me. And I saw the lifestyle that my owner had. He drove new cars. The wife had a new car, the house, everything like that. And I was like, oh, they must be doing really, really well. So this is a business I want to buy. And I did not have a great grasp of the numbers starting out, like not even at all. I knew how to sell. I knew how to manage and then lead people, but the numbers of it, I didn't know. So there's a couple of things that I really wished I would have known going in. But again, it was buying my first business. And just to give you an idea, volume wise, when I was working at the store before I was an owner, we were at like 1.6 million in sales. And cash flow was pretty good, but it became a struggle a little bit. And my idea was just like, I'll just sell more stuff. And if I sell more stuff, we'll be fine. Well, if you're not making the correct margins, then that's not going to be the case. Like you can, if you're losing money on every transaction, you can't work harder and get out of that. So one of the things that I wished I would have known was I wish I would have known the numbers better. And then two, I wished I would have, I bought the accounts receivable and the accounts payable for the business, and we made those match. But what I should have done is had them write off everything over 30 days. Unfortunately, a couple years later, I got 40 bankruptcy notices in one day, and it was basically for all this. And I had to write off about $100,000 in bad debt. That was just profit that I didn't have. So in the second bullet point, once I figured out how to read the income statement, my gross profit was, and I got a blank there because I didn't want you to cheat and read. And some of you people are going to be like, Chris, that can't be true. My gross profit in my shop was 22%. That's not just the parts. That's not just the labor. That was the gross profit whenever you organize everything properly. My gross profit was 22%. But because we had such a high volume, we always had cash, or pretty much always had cash in the business. And I almost want to puke right now thinking about it, because I get new clients all the time. People send me their information, and I've never run across anybody else yet that had a gross profit at 22%. Maybe parts, maybe labor, but not a gross profit. The good thing I will tell you is once I learned how to fix that and move forward, my gross profit went from 22% and my net profit was -3%. That's when we did that. My gross profit went from 22% to 74.8%. And then my net went up to 30%. So for a total change of 33%. So a little embarrassed, but outside of that, we're good to go. Just to give you a quick idea, the target GPs that I look for when I'm working with a shop, I want the gross profit to be 65% or better, and I want the net percent to be 25% or better. But this all goes back to, I had the tools to run that business and learn more about it, but I didn't know what to use, and I didn't even know where the toolbox was, right? So what tools does a tech need to do their job? They need hand tools, shop equipment, tablet, diagnostic tools, good communication skills, critical thinking. They need, I'm sorry, I jumped from that. So that's what the tech need for that. So what does a service writer need to do their job? They need a great point of sale software system and estimator, a phone, computer, good communication skills, sales skills, ability to solve problems. And then Amber, I noticed there's a chat, but I don't know if I need to do anything with that or not. But if I do,
that was
okay.
Nope.
Okay.
And I'll just say it really quick. I did put a message in for everyone. Please feel free to put your questions in there. And if I can answer or pose them to Chris throughout, I will do so. If not, we'll get to them at the end.
Okay, thank you. So this is what a service writer needs to do their job. So now what does a business owner need to do their job well? And I'm not talking about a business owner that's so busy working in their business they can't work on their business. This is a business owner that has to work on their business to move it forward and get things going. They need to know their point of sale numbers cold. I can't count on two hands how many shop owners that I ask, okay, how was last month? You should be able to rattle that off. You should be able to tell me, this is what my total sales was. This is a general idea of what my profits were and everything else like that. If you cannot do that, you are completely flying blind. You also need a great set of KPIs to look at and try to achieve. Like what's the goal? What are you trying to get to? You also need an accurate and up-to-date PRL or income statement. A lot of people confuse one with the other, but they're both the same thing. And then of course, a business owner needs great communication skills, leadership skills. Notice I'm not saying management skills because that's two different things, and the ability to coach others. Okay. So we're going to stop and do a quick quick poll question right here.
Yeah. Hey, Chris, before we do the poll, we had a question. What is a KPI?
A KPI is a key performance indicator. And in just a minute, I'm going to show you what we use at my company and with our clients, how to track that and what that dashboard looks like. But it's a metric that you are driving towards. Like if you have a 65% GP, that's a KPI. If you have an average estimate number of $1,600, that's a KPI.
Awesome, thank you. All right, so we're gonna launch the poll. And the question, are you currently using a point of sales system? Everyone should see it. We're getting results. I'm gonna give it a minute. And all right, we are going to end the poll and now.
Okay.
So it looks like 86% of the audience is on a point of sale system, and 14% are not, Chris.
Wow, and so how many responded real quickly?
Yeah, so a total of 14 people responded. So 60%.
Wow. Okay.
Yeah.
So that's interesting to know that many people of you don't use a point of sale system. And I will tell you, of course, AutoLeap sponsoring this, and I work with AutoLeap, but the big thing is get a point of sale system. Whatever the cost of that point of sale system is, once you put in a parts matrix and labor guide and all your other things, a DVI, just the DVI platform alone will increase your average repair order about $242. From my experience. So if price is holding you back on getting a great point of sale system, it should. Okay. So what happens when these tools do not produce the same results? Like if your point of sale system says one thing and your income statement or PRL says something different, and your KPIs or your profit gateway, which we use, tells you something completely different. If you have three different metrics, and they're giving you different results, then it's really, really hard to drive the ship or your businesses, I would say. So I'm going to give you, and I did this as a video real quick. So this is my profit gateway. And if you look at the left, we talk about total weekly sales, goal, start. We have a 4-week running average, and then the weekly things in there. We keep it to 25. Some companies do as many as 65 or 70. Typically, we're not trying to do a PhD. We're trying to get you into this and make this happen for you. So one of the things one of the things I'm going to talk about in a minute is average estimate, which is at the bottom. If your average repair order goal is $800 and your average estimate $600, then guess what? You're never going to get there. Okay. So we have to make sure that those things line up, and that's the KPI tracker that we use. And I'm going to show that again here in just a little bit. So if you look at this slide, we have a cutout on the right-hand side of our point of sale system, or I'm sorry, of our income statement or PRL. And on the left-hand side, we have the shop management system that shows right here. If you could read it, it says 46% parts margin, but this one over here says 61% parts gross profit. How many people have those tools, but they don't line up? Not even close. And so if that's the case, how do you know how to run your business, how to push forward? A lot of shop owners that have a point of sale system that I see, they're paying their technicians, they're paying their service advisors on what the point of sale system says. And so if I do a pay plan for you, and we're paying on total sales and gross profit, and you're using what the point of sale system says, and the margin's 10% higher than what your income statement is, then you're overpaying them and not paying correctly. And a lot of the reasons why that is because we don't have our income statement set up properly. We don't have labor and things like that in the point of sale system. So we have to make sure that our cost of goods sold and everything is as close to possible as we can get it. So a couple of things to make sure that your point of sale matches your income statement. Is your tax and benefit load in your technician's pay? So in your point of sale systems, are you putting, if you have a technician that makes $30 an hour, are you just putting $30 an hour in there? Or are you actually figuring out what his tax and benefit load is and then adding that? So say you're with your tax and benefit load, it's actually $38 an hour. Does that system, when you load it, reflect that? A lot of times I see people are like, Chris, my numbers just don't add up. And a lot of times when we dig into it, that's where we find it. Does your parts cost reflect what your income statement shows? There can be all kinds of reasons why that would not happen. Not returning cores, lost parts. I know everybody, a hot button issue now is parts, but a lot of our parts issues now are bad communication and things at the front counter where somebody sells a ticket and then they forget to order the parts, or 6 hours later, they're like, oh, I got busy and didn't do that. Are all of the cost of goods actually put into your point of sale system? Anything that you have that goes into a cost of goods sold should be in your point of sale system. So I'm going to ask this question and you can answer it later when we do the chat. What other areas have you found outside of these where the two don't match up? And by two, I mean where your income statement or PRL and your point of sale system don't match up. Here's the other thing I'm going to tell you. If your bookkeeper or accountant can't make the changes that we're getting ready to talk about, and I'm getting ready to show you, then it's time to find a new one. Stop being held hostage by these people. A lot of times shop owners come to me, and I've got a couple right now. We're still trying to clean up 2020. We haven't even got into 2021 or 2022 yet, but their income statement hasn't been done since then. And the shop owner did not hold them accountable to getting that done. It's great to have the point of sale, but you have to have the income statement because that's your true scorecard for success, that and your bank account. So I'm going to tell you again, if your bookkeeper or accountant can't make these changes, then it's time to find a new one. And there are tons out there. If you need some recommendations, you can email me. My email will be at the end, and I can share a couple with you depending on what you want to do. So a lot of times I get income statements that look like this, and I'm going to give a shout out. These examples came from Hunt Demarest at Parmelis. This is part of some of the ones that he's done, but I have full approval to use these. So if you look up here at the sales, it says sales $265,963.36. Well, that's great. What did we sell? Did we do tiddlywinks? Is that labor? Is that parts? I work with some specialty shops that do car wraps, tinting, things like that. And they just have everything thrown into a pile. So if you came to me and was like, Chris, are we losing money on parts or labor? I'd be like, I can't tell from this. There's no way I can figure that out from just looking at this. And at least in the example, we have the income statement or PRL. I get a lot of shop owners that have it on an Excel spreadsheet, and then they're commingling funds through the business and personal. You cannot do that. I promise you, just get out of that habit if you're doing it. All right. So we have no cost of goods sold in this one. So what are the 5 categories of sales? So in that one that we just looked at right up here where it says income and sales, we should have labor sales, part sales, shop supply sales. And if you're in California, it's parts kits, or if there's anywhere else that won't let you do shop supplies, you can do parts kits. There's a couple different ways to get around it. I'm not going to go into that here. Tire sales, and then sublet sales. If you have these categories, you also have to have the offsetting cost of goods sold or COGS for each one above. And so does anyone have any other sales categories that you might need to add? If you do a lot of towing, or if you own a tow truck that's actually doing customer tows, not tows into you that you're subletting, but an actual towing company, like if it says Chris's Auto Repair and Towing, then you would want to have towing up above, and then a cost of goods for down low. If there's any other thing that you do, when I had my shop, we did a lot of tires. So we had tires, and then we actually broke it down further by category because we did medium commercial, retreads, industrial, agricultural, things like that. And then we offset it. That way we could tell exactly what our margin was for each one of those. So now that you have those 5 categories, you have to make sure you have the 5 offsetting accounts down below that in cost of goods sold. So up top, we got labor sales. So down bottom, we got to have labor cost of goods sold. Up top, we've got parts sales. So down below, we got to have parts cost of goods sold. Up top, we got number 3. Bottom, we have to have number 3, and so on. Okay. So here's another sample. The other thing I will tell you is if you have an income statement and it looks like that first one that we did, so it just has this column without the percentages on it, I don't know how to do it. You can go into QuickBooks, click a button, and it shows everything in percentages over here. Go in, make sure you do that so you can see all these percentages out, okay? So in this one, it's a little bit better example because we have parts sales, labor sales, but down here we only have parts cost of goods sold. So I could real quickly figure out what the parts margin is, but I can't figure out what the labor margin is here. And we're going to get into it just a little bit. But so here down below, we've got shop supplies, we've got freight. And so if all this freight was because we bought parts, then that freight should be up here underneath parts as a cost of goods sold because it was a cost of doing business. So again, this is a little bit, I hit the wrong button, sorry. So again, this is just a close-up version so you can see it better. Parts, labor, parts, shop supplies. Okay, so we're going to stop real quick, and I want to ask you, for those of you that have an income statement, like not an Excel spreadsheet, not a napkin, anything like that, or maybe you can answer that if you want to. How up to date is your income statement?
All right, we're going to launch. How many napkin statements have you seen, Chris?
I see just as many now as I did when I started as a coach 10 years ago. I probably get one a month where it's like a piece of paper scribbled on. Not quite a napkin, but close enough that we'll say that.
That's perfect. All right, we're gonna so make sure that you get your responses in. I see a few people haven't done it. Click on the buttons. All right, we're gonna end it.
And so just share the results with me real quick.
I'm gonna share it. Can you see it?
Yeah, I can see it. So the ones of you that are doing it daily or weekly, I think that's fabulous. You know, if we're trying to make changes in the business, we want it to be prepared as often as possible and where we want it. For those of you that are monthly, that's okay, but just realize that if we're done in January, I guess if it's done on the first day of the month, that's great. But if January 1st is passed and we don't see the income statement until the middle or end of February, in my mind, that's a little bit too long. And so again, if your bookkeeper or accountant can't do that, maybe you need to bring it in-house and have it more up to date. So those of you that are waiting more than a month, that's not acceptable in my mind. You cannot make changes in your business and see where you're at. Now, my question to you is that because it takes you that long to get everything over to the accountant or bookkeeper, or is it because your point of sale doesn't match, or you having trouble with QuickBooks Online? And then we've got one person that says, what is that? What is the income statement? So that's great answers. And that's probably about how I figured that would break out. So that's pretty good. And so in this one, again, we're back to this example. So we've got sales and parts, sales labor above the line. We've got parts below the line. So we've got shop supplies and freight below that need to be accounted for somewhere instead of just in our expenses willy-nilly. Also, here's the other big mistake, the big thing that I don't like. Everybody throws, or not everybody, excuse me. Some shops throw payroll tax, uniforms, education, and health insurance in the expenses. If you have a technician, that's a direct cost of having a technician, whether you have 1 or 10. And those items, if they are related to a technician, they need to be broken out and then put in cost of goods sold for the technicians. If your education and seminars, if half of that is for service advisors and half of it is for technicians, then it needs to be split up accordingly. If half of that is for you as an owner doing 20 groups, going to Vision, going to STX, it should be split out for that. Like, you should also split out the owner pay in there and have the things that only go to you. That will only help you when you go to sell the business. So that way you can pull exactly what the owner benefit was out to make sure that you get that. Health insurance, technicians' health insurance should go up above. If you have drivers, parts people, car washers, whatever you have, if you have all those people in your business, you need to split it out accordingly. That way we can tell exactly what our margins are for those people in the business. So what should my labor cost of goods look like? It should look like this. You should have your tech gross wages in there, the payroll taxes, the insurance, the workers' comp, the retirement, if you have it in there, uniforms, any other benefits should be in there. If you have like a weekly lunch, it should go in there. If you set up a 529 plan for your technicians' children, it should go in there. Anything that you do to benefit a technician, a service writer, anybody should go in there. And then at the end of the year, don't just tell your technician that they made their percentage of $85,000. Add up the other benefits in there and show them truly what it costs you to have them as an employee. And hopefully it'll solidify the fact that you have great benefits. Taxes and benefit loads used to be around 18 to 25% because you've got your unemployment taxes and everything like that in there, some uniforms, a little bit of insurance. Now I've got shops where their tax and benefit load is like, if you have a technician that's $30 an hour, we're spending another $15 an hour on that technician. And so their actual compensation is $45 an hour. Same thing for service writers down there. Split it out. So you've got the service writer cost of goods sold. If you're an owner and you are the service writer 100%, then you can put this in here like that. But if you're an owner and you're not writing service, you have people to do that, then you need to separate it out as owner. So if we look at this now, in the original example, our gross profit was 68% or 65.6, I think. And so now when you move all these things around and look at it, your real gross profit is only 39.8%. It's still not as bad as my 22%. Terrible. I'm overheating now just thinking about it. But so that tells me that we've got some work to do in this shop. They're almost 40, but how do I coach this shop to get another 25 points out of it? Because my net goal, remember, is 25% and be able to flow that through the bank. So we have that in control and cash. If you've ever listened to my Auto Shop profits and cash flow stuff, that's where we really get into that and moving that money around. So you have to have these in the proper spot. And I would say 1 out of 50 income statements that I get is done like this. Like 49 out of 50 are not. There's some version of that first one that we were looking at. So now we've talked about getting the point of sale system equal with the income statement or PRL, and then the KPIs or the profit gateway. We have to make all these things line up, whatever you need to do. Again, if you're steering a ship, you can't steer its course off of information you got a week ago, 3 weeks ago, 2 weeks ago. The most accurate, up-to-date information is what you're going to want for your business. So we track about 25 KPIs, but here are my 5 most important. Average estimate, closing ratio, because average estimate, closing ratio, and average repair order all go hand in hand. Gross profit and net profit. Those are the 5 most important in my mind. And average estimate is the most important one on that. So if you're not tracking that, if your point of sale system won't do it, you have to figure out what it is. We used to have an old Excel spreadsheet because our point of sale system wouldn't have it. So I had to take all that data and put it in this Excel spreadsheet. And I fell into the trap. I thought I just needed more cars and needed to do more work. but that wasn't the case. What we did with my coach when I hired him is we looked at the inspections that we were doing, the amount of estimate we were having, and our closing ratio. And what I found out was if we just worked a little bit harder closing customers and did a better job of making presentations, we were not selling. We were writing up, but not selling about $40,000 of work a week. So just think about that. If you have a shop and you're like, oh my gosh, I have to have more numbers, which most of us right now are pretty good. The industry's really good. There will be a time when it's not, and you have to get prepared for that. But I'm telling you, look at what you're not selling and figure out a way to do that better. And then if it's a case like I was talking about earlier, where our average repair order goal was $800, but our average estimate was $600, then guess what? We're never going to get there. And again, I'm not telling you to make up anything, because we don't need to. There's enough broken things and things that are needed on cars that we can continue and move on. Just present it. So like always, if you ask me, if you track it and measure it, you can improve it. I'm going to show the profit gateway really quick one more time here. Just so you can look at it. So we've got parts gross profit, labor gross profit, average estimate, closing ratio, weekly fixed cost, effective labor rate, labor hours per repair order, DV inspection. So all the things are important, but those 5 I gave you are the most important in my mind. And there are other coaches out there that will tell you different, and that's fine. They're different coaches. They do different things. So here's another poll question, and I forgot what these were, Amber. I think these are the 3 towards the end, right?
These are at the end.
Okay.
So do you want to, so these are the ones that I referred to in the beginning. So part of these are on our normal survey that you guys get afterwards. So these are the 3 that, if you respond to these, we can see who responds. We'll send you a $50 gift card, Amazon gift card. Obviously, the content that we collect is utilized for future webinars. And Chris, I know you were going to offer something as well.
Yeah. So anybody that would like us to do an income statement review or business analysis of your business, just answer yes when that question comes up. And then I'll get a list of all the people that responded yes, and I'll reach out to you and tell you what I would like to see. And then you send that to me, and I'll take a look at your business, and I'll give you an honest opinion of what I think, maybe some areas of strength are and some areas where you can improve.
Perfect. So I'm going to launch the first one. I appreciate that. Did you like the content that was presented today? So we'll get that going. And I appreciate that. Of course, I appreciate everybody responding. I'm going to give it another second. So if you have not responded and you want that Amazon gift card, keep it coming. Awesome. And Chris, I'll share these afterwards with you.
That's fine, because you break my heart. You break my heart if they're all no. So the thing I will say is I tried to keep this content short and sweet so that everybody could do it at lunch or whatever, and then go on about their day. So
how about it? There's 0% no. So
okay.
I dropped it. All right. So next question. So this is more just general. I'm going to launch this. All of the content that you see on our webinars is either done by me researching the industry, or, our experts, just like Chris, bringing topics that he, feels are relevant. So this is multiple choice. So if there are multiple topics that you see on here that you would like to hear from next, please feel free to respond. I'm going to give it another 30 seconds. So make sure you get them in. You're still coming in. Chris, I think this is the way to do these questions.
I think so too. Yeah.
We nailed it. All right. Almost everybody has responded. So if you haven't, put it in. I'm going to give you a second. We've got one more, and this is the This is where you let us know if you would like Chris to do a free business evaluation. You will get that. And while everybody's doing this, if you have any questions, actually, so we just got another one. But again, right now, this time is also for you, right? We want these to be very interactive. Chris is here for you. So if you have any questions, please get those in. Anyone else? I'm going to keep the poll open for just a few more minutes. But Chris, what is a good labor profit percentage? Shop supplies
Hey,
percentage.
can you give me those one at a time? I saw there were quite a few of them.
Yeah. Okay.
So,
So what is a good labor profit percentage?
so again, this is me and what we coach at AutoFix Auto Shop coaching. My shops, I want to figure in the tax and benefit load, and then I want to have a 70% or better gross profit on labor. And so if you have it set at 65% and then you use your labor margin or labor multiplier, and that gets you the little extra percentage, then that's great. But 65% or better is beautiful, but I would really like you to be 70% or better.
Yeah. All right. So next one, shop supplies percentage.
So shop supply percentage, we want to make sure that we're making money on that. But what I tell you is if you have a point of sale system and you're setting that up, we want to set it up at 8% of parts and labor, like 8% of parts, 8% of labor, and then cap it. Back when I first started in the industry, it was really, really hard getting shop supplies. Now I have shops that have it capped at $49, $59. I've got a couple of Euro shops that have it capped at $99. And then I have some big diesel fleet companies that have it capped at about $160. So it's really up to you individually. But one thing is, if we track it and measure it and look at it and see, are we making money on shop supplies, or are we losing money on shop supplies? You know, let's figure that out and move forward.
Parts percentage.
Parts needs to be 50% or better. And ideally, I would really like it to be 55% or better. One thing that we have to look at as an industry is we've always taught for an hour of labor we get, or if we do, say your labor rate's $100 an hour, it'll deliver $100 in parts. But the vehicles we work on now are the most complicated they've ever been. And a Toyota Camry has 33,000 parts on it, and a Tesla has, I forget this, it either has 10,000 parts on it or 10,000 less. Either way, there's a lot fewer parts on a Tesla than there are on these other cars. And so eventually, if I'm looking 5 years ahead in the industry, we want to be about 1.4 labor to about 0.6 parts. We want to make our money on labor. That's what the future of the industry is going to be. And people are way more parts price conscious than they are labor price conscious, but we still have to have a healthy margin on the parts side of it. I had a shop that started with me, no kidding, their parts margin was about 15%, and they were paying all of their parts bills with a credit card, and they were having some returns and comebacks. So basically they were losing money on the parts. And so, you know, if we want to go further in depth in some of that, we can, but you have to have a healthy margin to survive and have a great shop and provide the values and benefits to your customer you need to do.
Yeah, couldn't agree. And then the last one on this question is what overhead percentage is good?
So what we call that when we're setting up the auto shop profits and cash flow is the OpEx. So our operating expenses does not include the cost of goods sold and things like that, with the technician's cost in there. So we want to keep the operating expenses below 30%, ideally around 22 to 25%. I have a couple of shops that are bigger shops, and they're down in the 16 to 18%. But I will tell you, if your operating expenses right now are 32%, then shoot for 28. And then once you get it to 28, figure out a way to get it to 25. Like, you should always be improving that number.
Yeah, absolutely. We did get another one. And guys, if you have more questions, please submit them here. What percentage of customers is normal to retain over the time?
So everything that I've read, everything that talks about, and this is going to answer your question a little bit backwards. So I guess I can figure it out. So typically every year you lose about 10 to 15% of your customers through death, divorce, moving. You did something wrong. They don't like you anymore. So you're going to retain, let's say 85% of your customers. If you have a rate that's better than that, I think you're doing pretty good. But you also need to figure out growth. Like all of my shops have done really, really well the last couple of years. And if I would really, really question you if your shop's not getting double-digit growth over, like if January wasn't double-digit over January last year and then the year before that, I would really look at some policies and see what's going on with those.
Yeah, no, that's fantastic. And I think those numbers were right that we've seen too. What percent of sales is ideal to set as a marketing budget spend?
Typically 3 to 5%. So but here's the thing is if you're a $1 million shop this year, but you want to be a $2 million ship next year, that didn't come out right. If you want to be a $2 million shop next year, then you need to market like a $2 million shop. So instead, say you're at 5%, just to make the math work out. If you're $1 million a year shop and you spent $50,000, that's 5%. But if next year you want to be a $2 million shop, you need to spend $100,000 straight out the gate in your budget. So you take 100,000 and divide it by 12, and that's what you need to be spending in order for growth and everything else. And of course, Google AdWords is always the biggest bang for the buck. But I've seen a resurgence in direct mail here lately, which is just boggles my mind. But people are starting to respond to direct mail again, where they didn't the last couple of years.
Well, I mean, I think that has to do with, we all get bombarded with phone calls. Just, how many times are you tracked online too nowadays? I love receiving mail. But the other thing I was going to say is when you do look at your point of system or your POS, there's systems that have Google reviews, which is also just a free, easy marketing tool that your customers, talking about retention, should be utilizing, and you should be directing them towards so that you get that good review. So we did get another one. On labor costs, we own and work for the shop, so we should put our expenses as an employee or as an owner.
So
this particular one, is an S Corp.
Okay.
We get W-2 wages.
Okay. So if I guess I would like a little bit more information exactly what role they're performing. But so let's say this is a couple, a traditional male-female couple. The male is a technician in the shop, and the wife or whoever is a service advisor or doing bookkeeping in the office. You should pay yourself, if you're a technician and you're working in the shop and you're the owner, you should pay yourself as a technician, all your stuff. Because if you're actually turning wrenches, responsible for hours and everything else, that's where it should go. You should go under labor cost of goods sold under that. On the other side of it, you should be, if you're fulfilling the role of a service advisor, then you need to pay yourself as a service advisor. But let's say you grow the business and the technician works themselves out of being a technician and they're owner full-time. Then you take that pay out, put it into the expense side under owner with cost of goods sold, and then you put the other technician in there. Same thing with the other person fulfilling the other role. Hopefully that made sense.
I think that makes sense. Donna, if that doesn't, just reach out to us and we'll get that further explained for you. Last thing, can you reiterate again why a shop should not buy their own parts online?
I don't have a problem with you buying parts online. I guess it depends on how you're getting them. But I think maybe the confusion is I mentioned that I had a customer that was buying their parts and paying for it with a credit card. And what was happening is the credit card bill wasn't getting paid on time. And so they were getting charged like 25, 30% interest on that credit card, which made their parts costs go up, but they weren't recording it that way. So even though they were losing money on parts, it made them look like they were doing money. If you can buy your parts online, buy your parts online. You have to build a relationship with a vendor. And then do what you need to do to get the cars out nowadays. Parts is such a hot issue. It's not even funny at this point.
Yeah. And then lastly, Chris, obviously you're a coach. So do you offer, can you just go into kind of the classes that you do offer? If you do on-site group classes, which I know that's a yes, one-on-one coaching, and just different options.
Yeah. So we have a couple different options. We have our AutoFix Alpha groups, which is a peer group or 20 group that we provide. And it's just a group of shop owners. We do it a little bit differently. We have 2 monthly meetings on Zoom. We use the Marco Polo app, and then we use a private Facebook group where we stay in contact with each other. And then we also have 2 in-person meetings a year. We have that. I also do on-site visits. Like if you just want me to come out and watch for a couple of days and write everything up and see what you're doing, I can do that. I can help with exit strategies. One of the big things that I do constantly is my auto shop profits and cash flow implementations. If you don't want coaching and you want me to help you put that in, I can do that. And then the one-on-one coaching, it's way more of a commitment. It's us working together every week. Plus the way it's structured, you also in the Alpha group. I also teach for World Pack, and I'll be at STX this year. I think my class is Friday morning, but there's already 65 or 70 people signed up for that. I don't know if they're going to let me do a second class or not, but we'll have to see. And then 2, whenever I get the list from Amber for everybody that attended, I can go out and I can share with you some of those links and things to our YouTube channel, our podcast on the podcast page, and our Facebook, and do all of that. And then of course the weekly blitz, it's completely free. Everybody can go to my website and do that. It's on Apple Podcasts and Spotify. It comes out every Monday morning, real early. I try to keep it less than 20 minutes. You can listen to it on your way to your car. I re-listen to it every week on my morning workout on Mondays. So there's all kinds of different ways. And then 2, I'm going to share with you here in just a minute, my email.
Go to the next slide, Chris.
Okay.
I was say while you're finishing up, just so that
Yeah.
they contact information.
Yeah. So if you want to write this down real quick, it's Chris Cotton, 580-491-3519. And then my email is chris@autofixsos.com. I'm always up to listening to learning and seeing how we can do better and do more. I also have other coaches that work for me. Michael Galini, he's a great coach. He has a European shop in Plano, Texas. He does a great job, phenomenal growth with that. And we have him working with clients. And then lastly, just thanks for everybody. Also, you can go to autoshopcoaching.com and you can see a little bit more about what we do there, and click on our podcast there, and you can listen to it through your computer. So I just want to say thanks. I know everybody's busy and has things to do, and I really, really appreciate the fact that you guys would take time out of your day to listen to little old me. And that's all I got.
I mean, we'll keep you. You're pretty cool.
Okay.
No, I do want to reiterate, guys, like great questions. Really appreciate your engagement. I will work after this to get everybody's gift cards in the works. Everybody has my email, Amber@AutoLeap. So if you don't get anything by Monday, just reach out. I'm working through it. You will also get your slides and recordings, most likely by Monday as well. So I really appreciate it, Chris. As always, thank you. It's a pleasure working with you. And yeah, if you're at STX, guys, visit Chris. Check out. We're also at Vision. AutoLeap will be at Vision, so stop by if you're there. But yeah, you guys have a great day. Have a wonderful weekend. And thanks again, Chris.
All right. Thank you. Thank you, everybody.